Yeah, and you can see, Brian, if you flip up the chart again of the chart of truth, you can see that, we're in the zone. It could chop around, or it could make a burst for the green line, which is the 2 standard deviation kind of overbought versus the regression channel. So that's interesting to me.
Yeah, we just lost the 2 handle since we started. 1.995 right now on UST 10-year Treasury yield.
There you go.
So, Raoul, we talked a little bit about the macro picture. We've talked a little bit about the geopolitical picture, obviously, which is very unstable, to say the least right now. How do we, one of the things that you've been speaking about very eloquently on Real Vision, in Raoul's Adventures in Crypto, are your conversations about the crypto space. How do you fit it in, and how do you reconcile all of these positions, and where do you see crypto going right now?
So in answer to right now, I don't know. The chart looks like it wants to go lower again and have another spike low, and that's been my view for a while. However, the crypto markets have not made a new low versus last year. And I think we've thrown 8% inflation, the market pricing in at 1.8 rate hikes, and a war, and you haven't made a new low. It's like, okay, that's telling us something. Now, maybe that can change, but I mark that down as interesting. I've got a lot of technical divergences, a lot of the on-chain activity is very interesting. So I'm still thinking that we probably captured the downside in this 50% down bracket that we've been in with Bitcoin and ETH. So that's where I think we are, but I'd like to zoom out. So just like we did before, where are we before? So Brian, if you pick up the first chart, so I've talked about this before and just updated it for Global Macro Investor, my research service, which is crypto users versus the internet. What we did here, well, Remy did it for me, was we started at 5 million users each. When they both hit 5 million, we then start measuring them. And what we found is that crypto has been significantly outperforming the internet in terms of adoption. We're way ahead of internet adoption. So if we just continue at a kind of slightly slower pace, we get to 5 billion users by the end of the decade. So that's basically total adoption of crypto.
And by the way, it makes sense that we'd see that rapid increase in the rate of adoption because it's being monetized by the users. Facebook is a great platform, but it's been monetized by Mark Zuckerberg, the early founders and investors. What makes crypto different is the capacity for people who are using the network to profit from some of the economic upturn. That's, I think, maybe the most significant.
Of course. So like the internet, we didn't profit. We couldn't buy tokens or shares of the internet. We had to find the companies that were going to win. The internet won, clearly. But here we can own the network, right? This is how powerful it is, there's something called that. So Metcalfe's law is the network effects, but there's the other thing called Reed's law. And Reed's law is when you build network effects upon network effects and you get true exponentiality. So if we're thinking here, we're building the foundation layer was the internet, then mobile data, 3G and all of that starts accelerating it. And broadband and all of those things, and then you add the internet of value on top, of course it's more exponential by its very nature. And the fact that you can own part of the network makes it more attractive for everybody to be involved. So if we look at the next chart, I've got another chart of this, just zooming in a bit. So Brian, if we flip to the next one. So here's a couple of assumptions. So what you can see is in the first 6 years, the internet grew at 76% a year, or 78%. Crypto has been growing at 117%. So it's much faster growth. So we're at 300 million users now. At the same point, the internet was only at 119 million. So you can see the scale of how this happens. So if we assume that suddenly everything slows down in crypto adoption and we grow at the same speed the internet did over the next 4 years, so this is now from year 6 to year 10, we get to 500 million users. So 1.2 billion users. If we just assume the ratio lower, then we still get to ridiculous numbers of 2 billion by 2026. So it's incredible. And when you're growing at 100% a year, it's 4 billion the year after. Yeah. And then, so the next chart is another interesting one about adoption. And this is the one I'm pretty proud of. So I've been bleating on about Metcalfe's law, network effects, how to value these things. And it's very hard to do because Metcalfe law is quite a complicated formula and you don't know what data to use. So I thought, I wonder if I can approximate it. And Remy and I went through all of the data for writing Global Macro Investor. And what we built was a network value model. And we tried a number of different things and found out you can explain every crypto network by two simple things: the volume traded on a daily basis, monthly basis, and the number of active wallets over that period. Once you map that out, it's one multiplied by the other. The charts exactly fit that of Bitcoin. So we thought, okay, this is interesting. So basically the network is the amount of activity on the network, not in number of transactions, but in value that gets exchanged every day, and the number of people exchanging value. So if you think of a network, if you've got one participant who's doing $1 billion, it's not very valuable. But if you've got $1 billion being done by 20 people, you've now got a network. So it kind of makes sense. So I wanted to then test it against Ethereum. So if we look at the next chart, it works perfectly for Ethereum as well. I don't know, we've lost Brian now. Brian?
I think the charts are just lagged. There we go.
There we go. So that's Ethereum. So really interesting. And it also works for XRP, which is weird. You wouldn't imagine it would, but XRP works exactly the same. So then I tried it for Polkadot, and it works exactly the same. So what it shows you is everything in a network is basically the volume of transactions in dollar terms or value terms and the number of people using it. And that's it. And that, I think, is a big breakthrough for the space. I don't want to pat myself on the back. Now, it doesn't mean I can yet forecast it using this, but I can show what drives the value of a network. And I'm working on other models now to start having forward-looking indicators to understand, okay, what's really going on.